So first of all, I think thinking about the quantum of what's needed, right? So that will also direct you to certain profiles of investor.
Welcome to the investment season of How to Start Up, a podcast for anyone starting or scaling a company. Hosted by me, Juliet Fallowfield, founder of B Corp certified PR, communications and podcasting consultancy, Fallowfield & Mason, where we teach you how to own your PR in-house. Raising investment can be a daunting process, especially if you've never done it before. From knowing how to write a pitch deck to what type of investment is right for business, there are so many things to consider. So for our 9th season, you'll hear from successful founders and entrepreneurs on what we should be doing now, next, or never when considering investment. Although securing capital is the key objective when raising investment, money is not the only thing to consider. Many investors can also offer vital support and advice too. In this episode, I speak with Michael Tobin OBE, serial founder, author and non-executive chairman of several international businesses. As CEO of technology company Telecity from 2002 to 15, Michael grew the company from a market cap of 6 million into a FTSE 250 company worth 2 billion. Given many founders require more than just an injection of capital when scaling their businesses, Michael shares his advice in this episode on how to ask your investors for that extra support and what you can reasonably expect. Hi, Michael. It's wonderful to have you on How to Start Up today. It would be great if you could give us a little bit of an introduction as to who you are and a bit about some of the businesses you've started.
Thank you very much for having me. Delighted to be here. Yes, I started with an apprenticeship a very, very long time ago at 16, left school at 16. Always wanted to sort of make money, earn money. Wasn't as academic as some of my peers either. So that worked well for me. I did an apprenticeship in electronic engineering. Got many lucky breaks along the way. Got my first MD role at about 21, made lots and lots of mistakes, growing businesses and managing teams. Spent a few decades around Europe, starting businesses up in France, in Copenhagen, in Frankfurt, generally for bigger and bigger businesses. Came back to the UK in 2002, had a basket case of a business called Redbus, which was a data center company. It was listed on the main exchange, worth about 6 million, but going bankrupt. Managed to get some believers in and got a bit of recovery money, took it private, relisted it in 2007 for, I think, just over 200 million. And then we sold it in 2015 for 3.6 billion. And subsequent to that, I work with various sort of private equity and VC companies to identify opportunities, run them, and then obviously exit. And been doing that since 2014-15. Chairman of about a dozen businesses around the world at the moment. Got some restaurants, which is more of a hobby than anything else. Written a few books.
Incredible. I'd say a very proven track record of success.
I've been very fortunate.
I don't know. A lot of people say to me, oh, you're so lucky you're self-employed. I'm like, there is no luck involved. It is hard work. There's no chance to this.
Well, as you know, no one asks you to get up in the morning, which is great, but no one asks you to get up in the morning, which is bad, right? It's all on you. You can decide everything, but you must decide.
Yes. Given this season is all around investment, I would love to speak to you a little bit more in detail as to people talk about finding investors is really hard and securing investment is really hard. But then once you've done, what else investors could bring to the table to support you and how to go about it? Like identifying investors is one thing. Have they got the budget? Are they interested in your business? But are they the right fit? And what other value in terms of soft skills or connections could they offer you? I'd love your perspective on this.
Yeah, so there is a lot of money around, right? And I know when we say there's a lot of money around, everyone goes, yeah, why can't I find any? But it's because everyone has very specific objectives about their investment, right? So one can be the returns profile. One can be their involvement or the opposite of involvement in any particular thing. One thing can be the duration of the investment. So they may be looking to cycle their money in a 3 to 5 year period, and you're looking for a sort of a 7-year story, right? Especially from early stage. And there's a lot of people now using the current market where debt was usually available very, very cheap until recently. We always had the option of just leveraging up on the debt, but now that's not really a good option because of the interest rates and everything else. So early stage investors are saying, okay, I'll give you money, but I want preference terms in there, right? So I want 1.5 times cover on my asset. So if it's not actually going to hit the numbers that everyone says, I get my money out before you do, and I get 1.5 times my money before anyone else touches it. So there's lots of different rules that people are putting in and around investment that are making it much trickier, especially for early stage businesses, to not get almost ripped off in a way from investors. And I know everyone's out to make money. And so at the moment, people with money feel they have an upper hand in negotiations. And I think that's one important thing, is really make sure people know their worth. Right? If an investor's remotely interested in talking to you, it's because you have something that he doesn't have. Okay. And so that's a good starting point mentally to think, I don't need to sell my soul to the devil here. When people need money and you're burning through cash in an early stage environment, there's usually a sort of a point where if you're not getting the interest from investors, you start to panic a little bit, right? And that's only natural, but you've got to keep a level head and make sure that when you're getting these investors in, that you and them can have an aligned view of life in all the different things I've mentioned: timelines, time horizons, yield, returns, all those sorts of things. But yeah, you're looking for things that over and above the cash as well, right? You're looking for, have they done any business in this sector before? In which case they probably will have contacts. Can they introduce you to the right people that can accelerate your business? Are they well connected reputation wise that might help the exit? So even if they don't have any knowledge of your sector and maybe can't introduce you on that side, they will have perhaps strong outcome based relationships, right? So they'll move you to the next phase of life where he may be a sort of an A round type specialist, and there may be a B or C round, much larger people that have done lots of deals with him in different sectors, but trust him. So that can also be incredibly valuable, is understanding what journeys he's gone through, and then how does he build his track record up from there.
It's not just thinking about the immediate need. A lot of people in the season have talked about, don't have your back up against the wall. Make sure you're planning for this in the future. It takes time. So you're not then taking the wrong investment, and you're not letting investors run you to that deadline. But also that next step and the step after that of really, this is a long-term relationship. What else is in both of your futures together? Right?
Yeah, I mean, a wise old guy told me once, he said, isn't it interesting that umbrellas cost a lot more when it's raining than when it's sunny, right? And when you think about it, you go to a bank when you need money and they don't want to lend to you. But if you go to a bank and start talking to them when things are good, and you just say, no, things are good. And after a while of doing that, they come to you and say, can I help you? Can I lend you some money? Right? And so this concept of being significantly ahead of the need point is very important, because one, you're proving to people that you can manage your ship, right? And also you can say, look, I'm going to need money in 2 years' time. I don't need money now. And I don't want your money now because it would be over dilutive to take investment now on the valuation but I can see a path to twice the value of my business, and then I will need some more money. So I'd rather give you the opportunity to invest then, and you'll get half as many shares for the same value, right? Which is beneficial to me as a founder. So make sure that you're not looking to buy an umbrella when it's raining. Okay.
Yeah.
So get that early in the process. Make sure that you're talking to people and they're seeing that your business is good. Inform as many people as you can. Make sure that they're all involved in the story, but then don't ask them for anything.
Yeah.
Right? And then carry on your way.
I love that. Because in my day job, when I'm not doing podcasts, I enable businesses to own their PR and communications in-house, because they are their own best storyteller. They just might not have the skills to get it out to press. And we are always talking about planning and foresight. You needed to be planning for this 6 months ahead of launch. And typically brands are like, oh, we're launching tomorrow. What press can we get? No, it's a nightmare. But not to catastrophize, but if you carry the umbrella, it doesn't rain, is my favorite expression. And actually it's pre-purchasing the umbrella. And I love that you talked about that. They get more expensive when it rains, and it's raining in London today and everyone's just like, winter's here. But it's that foresight and that planning. And I think when you're pitching, whether it to be a journalist, to an investor, to a future employee, to a future board member, B2B, B2C, B2E, it's so interesting. If you go into it with confidence and foresight and planning, people go, wow, you've really thought this through. I admire that. I respect that. I have confidence in that. So when someone's investing, of course, confidence is probably the number one thing they look for in a founder.
Yeah, I think that's probably fair. It's quite interesting. The other thing that you're mentioning there about the rain in London, I bumped into, we live next door to the vicar, the local church, bumped into him this morning, and he said, how the weather's changed in a day in London. And my attitude was, well, it's not bad for October. He said, yes, but it was October yesterday as well. Right. That was quite an interesting concept, because on one hand, we should be thinking October is likely to be rainy, and therefore make sure that you're prepared for that rain. And then don't get suckered into the fact that if it doesn't rain, it's not October, right? It's still October, right? And it's still probably going to rain.
Yeah.
So in January, make sure that you're prepping for October with rain.
Exactly. This is probably not related, but someone else said rain is very welcomed in a drought. Rain is not always bad. And actually, depending on your circumstances and what you've needed. And anyway, we digress.
Yeah, probably
English.
We thrash the rain analogies to death.
But when people are looking for investors and they're looking at how much they might need to raise, and they're looking for those extra parts to an investor, where should they seek them out? If they've identified someone that we need someone who's going to help us with our exit, how on earth would they try and disseminate that kind of avatar?
Okay, so first of all, I think thinking about the quantum of what's needed, right? So that will also direct you to certain profiles of investor. So again, there's a fine balance between taking a lot of money early, which everyone likes to do, which for me ends up being unnecessarily dilutive for founders, or taking just enough money to get you to a point where your valuation increases and then taking more. So once you've identified the quantum, that will start to direct you family funds, venture capitalists, all these different types of people. What you then should be looking for is who's going to contribute more than just cash here, who's got the access points to either contacts that I will need to grow my business faster, or contacts that will allow us to take the next phase of the journey at some point in the future. And then there's something else, right? There's the chemistry between you and them. So in my chairman roles with private equity, a lot of my work is trying to be, if you remember the Hitchhiker's Guide to the Galaxy, the Babel fish between the management's speak and the investor speak. And very often they're saying very similar things, but using different words, right? Because ultimately everyone wants the same outcome. Everyone wants to make a lot of money, right? So they're saying it in different ways. One is looking at yield. One is looking at acquisition cost. And actually by aligning all those words into the same sentencing, right, then you bring people onto the same page. You've got to make sure that you have the capability to engage with an investor in a chemistry way, right? So it's saying that, yes, we understand this could go wrong. We understand that we might not hit the targets because we're so early. You can say you're going to grow by 100%, but that's because you're really small, and 1 + 1 is 2, and that's 100% growth, but it's still 1, right? So there's a lot of things in there that if you can just get that chemistry right, then everyone aligns much quicker. Now, I think the other thing about it is try to find yourself an independent, either ideally a chairman or an independent non-exec who can do that for you, because in times of argument, let's put it that way, between or disagreement between you and the investor, you don't want to ruin that relationship, right? You want to have someone that can be your bad cop.
Yeah.
Right? You want to have someone that you can moan at and say, this is my position, and it's really contrary to them, and I don't want that. And allow them to go and have that battle and debate. And by the way, that same person will be having exactly the same conversation on the other side. And their role then is to come back to you in a conciliatory environment. But what it allows you to do is not have the kind of standoff and unhappiness with your prime relationship.
Yeah.
Right. So having that third party sort of independent, and give them some sort of equity in there or something, but they really should be there as someone that has no material vested interest other than to see both succeed.
Mm.
Right. And you can pay them a 30 grand salary or whatever, or you can give them a small equity piece, but nothing big, because that will then start to put their own opinions into the mix. You don't want that. You want them to help you find ways to bring your investor and you in the same page without you having to scream and shout at each other.
Because I think that's me looking into friends with businesses that have gone after investment. And unfortunately, I haven't gone there. And when you become self-employed, you have a lot of autonomy. You are your own boss. And everyone, you have endless annual leave. I'm like, you have none. But there's also the flip side that if you go after investment and you have these investors that you need to answer to in a way, or could at least communicate well with. And I really appreciate what you were saying, because for me, obviously, I'm passionate about communications, and typically we communicate with press on behalf of clients, or we enable clients to speak to press themselves. But that knowing how to broker that conversation and who to say what to and when, having that other party in your business that can have those difficult conversations for you, it sets you up for success, because you'll be going presumably to investors with the good news and professionally in an organized manner. And then the other person that's there to support you can go and manage that conversation in a different way. And someone else said this to me: when you're self-employed, no matter who you are, if you're a hat maker or a skincare expert or in a service-based business, 80% of your job is sales, whether you like it or not.
100%.
And it's networking. And I often say it's dot connecting, because networking to me has a 1980s connotation to it. But it is spending time and effort out there talking to people.
I go to endless sort of cocktail events and all these sorts of things. And sometimes my wife says, like, you're tired. And I go, oh God, I've got to do this thing. And she goes, like, just don't go. And I say, well, the thing is that I've been doing that now for decades. And there are people phone me up completely out of the blue that I've met 6-7 years before that have said, you probably won't remember, we met in such and such, but this opportunity came up and I remembered you or something to do with that. And
never regret a conversation, ever.
It's again, it's the hard yards, right? And it's your choice whether you do all that networking, and almost always nothing comes from that at the event or in the evening. But you just never know when it does come, right? And so you spend your life just opening doors around you. Don't necessarily have to go through them, just opening the doors.
Yeah. It's very difficult, especially in small businesses, finding the time to do anything properly and fully. But I've very much learned that is something that needs to be prioritized. And now I'm fortunate to have a team. Again, not fortunate. It's strategic. It's definitely planned for. But they are doing their jobs and I'm doing mine. And I'm in the process of trying to write my own job description. And part of it is going to events, is talking to more people. And given I'm in communications, I obviously love talking. I do a podcast. I love talking to people. But it's more that I get energized from those conversations. And either I'm able to help them in their hour of need or connect them. And that comes very naturally. And I feel like a lot of people who've done well in business have this instinctive urge to help other people with no want to see anything back. But inevitably, people remember you and are grateful for that, and you're top of mind and you build a reputation. And then they will go, oh, by the way, you need to meet this person. And that skill sharing, that mutual mentoring, I absolutely love.
But you just never know when the wheel comes around again. And also, I think I've been, as I said earlier on, so lucky in life to be surrounded by great people, to be, in the right place at the right time, and allowing other people to slightly short circuit some of those pain paths, I think is great, right? And everyone remembers it. Everyone appreciates it. If they get an opportunity to somehow repay it, I'm sure they would. If they don't, that's okay. It's another door opened. You don't have to go through it.
Karma. So let's say you've identified the right investor, their game, they want to invest, and that there is other networks they could open or doors they could open for you in the future. Do you openly say that in the early conversations with them, of saying, I'm really attracted to you as an investor because, are you candid about it?
Absolutely. And you can call them out on it as well, right? And you can say, let's assume everything else is fine. The valuation's fine. The terms are okay and everything else. So I can't afford any part of my kind of ecosystem not to be pulling in the right direction, right? Because the ecosystem is so tight and small. So how do you think you'd be able to benefit this relationship, whether that be through contacts, opening doors, ideas, and some of them slightly larger ones, some of the kind of more structured VCs, they may have people in their team that can come and run analyses for you, where you don't have a guy on the payroll that's able to do a bit of number crunching that you need to give you an insight into part of your business, and say, look, can you bring him in and sit with me for a couple of days and just throw me out the answers to these questions, right? They can deliver that. And there are many things that they can do that they'll be using these tools through due diligence and everything else on your business. After that, unless you ask for it, they won't think to do it, right? And say, well, that guy that spent all that time looking at my business so that you could invest, bring him in again and get him to look at this for me.
And it's with everyone's best interests as well.
It is.
Every single guest in the podcast, I think we're around 80 episodes, had said, get a good accountant, get a good mentor, but also be completely comfortable with putting your hand up and asking for help. Because if people don't know what you need, they're unable to help you. And I came from very beautiful luxury brands that were very private, Chanel being one of them. They did not need any help. You do not partner with anybody. You have budget just to do it all on your own. And then going to a hotel brand that had no budget, it would get very nimble of going, hang on a minute, we can be quite tactical about this and work with an airline and tour operator. And you become very strategic in how to get stuff done. And then self-employment, you're like, I know how to PR something. I have no idea how to run a company. So this podcast is me putting my hand up and asking for help. And it has been the best thing I've ever done, I think. It's given me so much reward. But a lot of people feel quite proud about it, or they don't want to admit they don't know something. But what would your advice be for a new founder around that?
Oh, God, look, I mean, so first of all, generally, and it's not 100%, but generally, early stage businesses are with younger people. That's the time that you can try and you can not be afraid to fail, because you've probably got less people that are dependent on you. You've got less obligations and commitments. So the downside of getting it wrong. So I tell the kids, like, there's no such thing as failure. There's either success or learning. And so the quicker you can learn, the more likely it is that you succeed. So getting it wrong is simply understanding what not to do. Right?
Yeah.
And so the quicker you can get through that, and asking questions is because you're at that stage of life, you haven't experienced it all. So talk to as many people as you can and try and short circuit that learning curve. Right.
Yeah.
And ultimately, there's not a million things that are different in business. You know, cash flow is really important. Selling is really important. Selling yourself. I like to talk to people about kind of building a VPN of trust between you and the person in front of you, right? And once there's this kind of channel of trust, you can throw anything down there. The moment it is not, of course, you break the VPN of trust, and then it's very hard to get it back. But once there is that trust, and that trust is only between individuals, it's not between companies, it's not a product supplier relationship, it's individuals. And so once an individual says, don't let me down, and you move heaven and earth not to let them down, that VPN of trust is kind of set up, right?
Yeah.
And I think that those are the sorts of things that if you keep that at front of mind, and again, none of this is rocket science, but it's worth reminding or having someone remind you on a regular basis, because we get caught up in the daily life and everything else. We forget the stupid things, the obvious things. Mm-hmm. But having someone around slightly grayer that can continuously remind you to think about things in a certain way. We call them mentors, we call them friends, we call them business partners, but they're just helpful, and it costs nothing. And it actually costs the person nothing to remind you.
Yeah. And people like to help. This is something that really surprised me, that if you ask someone, I don't think it's flattering their ego, because there might be part of it to that they're like, oh, wow, you think I've got the answer, which I always get really surprised at when married friends ask me for relationship advice. It's, do you know I'm single and you're the married one? This makes no sense. But it's people who want to have a conversation. And if you're humble enough to put it out there to say, look, I'd really love your opinion on this. People are like, oh, great. Yeah, let's chat about it. But you have to put your hand up. You have to let them know. They're not psychic, unfortunately.
And that's a very good way of putting it, because if you say the way you ask people also is important, right? And the way you just mentioned it there, I'd love your opinion on it, is better than saying, tell me how to do this. Mm. Right?
It's too much pressure.
Yeah. And it's also like, well, go and figure it out yourself.
That's consulting.
But if you say, I'm thinking of this in this way, how would you think about that? Mm. Right? It's a much more engaging way to converse with people. And also, that then is, you can have a dinner party and you can have a conversation with someone and you end up sharing views on something. And it doesn't feel like work. It's not consulting. It's sharing views. And people get very passionate about their view. If you can create that environment with a mentor or somebody that's going to help you with your business, right? And you can throw a view out there and immediately it gets pushed back on for X, Y, Z. You've got data. You've got real value there, right? You can choose to ignore it if you like, but it's a real value of an opinion. So I do think I like what you said there, and it's very important how you ask, how you engage with people, and you get a much richer outcome from that.
I'm loving this conversation because it's all about communications.
It is.
It's really, and it just validates what we're helping our clients do all the time. So thank you for that. It wasn't deliberate in any way. People underestimate it because everyone can talk and everyone can, everyone thinks they can listen too, which is,
that's the key, and reminding ourselves that there is an art to properly engaging with people over a conversation, which involves a hell of a lot of listening, and not listening to the spaces for when you can talk, but actually listening to the content and being prepared to change what you thought you were going to say because of new data coming in. I think that's an important point.
We've just gone through the whole B Corp process and they're very hot on feedback. And I'd been trained to do this previously, but asking all of your stakeholders, whether it be your suppliers, your team, your clients, your environment, co-working places for feedback. And actually for us, it's been the most useful, especially when you're a service-based business, but having those data points, having that tangible trend of feedback from people. But even within the team, we were having this debate the other day and I was like, no, but I feel it should link from the LinkedIn to the da-da-da-da. And one of them, who's a new recruit, said, what are we trying to achieve here? And I was like, good point. And it was just having that trusted space where we could actually, and challenge each other and have a proper chat about stuff. But hearing what people say, I think, and digesting it properly and revisiting it later on. But with that art of communication and be able to then take it and put it back out there in a better nugget is also super useful. One thing that we do with guests is from the previous guest, they have a question for the future guest. And our previous guest was Daisy from The Deck, who is now has the biggest storefront on Savile Row and just launched her ready-to-wear yesterday, which is quite amazing. But her question I found really interesting. And she said, what would you attempt to do if you knew you could not fail?
Well, there's one thing. So I've done a few crazy things for charity over the years. The last one was trekking to the South Pole and raised a couple of million for children with brain tumors.
Wow.
And before that, I did 40 marathons in 40 days, which was also brutal. But
oh my goodness,
next one
more than Lady Izzard.
It is. The next one that my wife is still insistent that I shouldn't do, but is kind of softly planned for next year, is row in the Atlantic. And I think if I knew that I could not fail, then that would be a no-brainer to do single-handed. Whereas she's forcing me to take one other person along the way, right? So I would definitely row the Atlantic single-handed if I knew I couldn't fail.
Amazing.
For charity.
Good luck with that.
But the whole point, you see, the crazy thing about that is I probably wouldn't do it if I knew I couldn't fail, because that's the challenge is part of the achievement.
And the risk factor, the not knowing.
Yeah, it is. And people start their own businesses. Yes, they want to make money. Yes, they want to be successful, but they should enjoy the fact that that's why people go to a casino. They know that the house always wins, but they still enjoy going to a casino and playing the game because it's fun when it happens, right? So enjoy the journey.
Do you think there's a bit of there's a certain personality trait of people who are serial entrepreneurs because you've got a taste of it and you're like, you can see the potential of it. And for me, I never imagined I'd do it. I had wonderful, gorgeous jobs in amazing companies and I was doing well and I was made redundant out of the blue. So I had no choice. The world had fallen apart. It was pandemic. I thought I'm going to make up a job for myself. And I was not brave. I just had no job to lose. I had nothing to lose. But people who elect to walk away from a salary and start a business, that is a much more thrilling / petrifying decision to make.
Yes.
But I think once you've done it and you realize that's possible, and then you've overcome building a website, that's possible. Oh, I've recruited a team, that's possible. you have this addiction of what else did I not know I can do that I can do? Do you think you ever lose the love of that?
I think you do a little bit, only because as you go through life,
really tired.
You get a family, you get kids, dependents, and your risk profile changes.
Yeah.
Right? The things that you could do because you had nothing to lose, suddenly you've got a mortgage to pay, you've got this, you've got that. And it takes a different thought process, but it takes different courage as well to, when it's just you kind of go, well, I can take that. And I know that even if everything fails and I start from zero again, I can do that.
Mm.
But when you have incremental dependence, when you've got a business that's employing 400 people, the responsibilities, you can't just say tomorrow, that's it, I've had enough, I'm done.
Yeah.
These are people that have sub-dependents as well. They have mortgages, they have children. And suddenly your responsibility is quite heavy to make it a success, not just for you, but for everyone that then is dependent on your success.
And they'll never know what it's like to be in your shoes because they are the employee and you're the self-employed person, which I find very weird because you're working with them like this. Yeah.
But it's right, because they expect their salary to be paid at the end of the month, and that's that. But I think that does change. So your appetite for risk as an individual probably gets higher as you go, in the sense that you've done it before, therefore you're more confident and you go, yeah, I can fix that, and I've got the pitfalls. But actually it's then tempered from your evolution of your life, if you like, as more dependents come into it.
And you're more aware. Whereas when you start at the beginning, lots of people have said, if you told me now what I would have to have done to get here, I probably wouldn't have done it. So it's good that I didn't know.
Well, as a kid, I used to stand on the edge of buildings and climb trees and all this sort of stuff. No way I'd take those risks now.
Yeah.
You know, what if you fall? Well, so
what would your question be for our next guest? About anything about entrepreneurship or investments?
So what is the one single memory in life that someone said something to you? What is that one thing that's stuck with you all your life as a single kind of piece of advice or phrase? I'll tell you what mine is. When I got my apprenticeship paper, I was 16, a very long time ago, and there was no internet, there was no mobile phones, nothing. And I had a letter from a company called Rockwell Automation, and it was to tell me that I'd got my apprenticeship position. And I was sitting on Bond Street Station on a bench in Bond Street Tube Station, and there was an old man. I'm sure he's long gone, but he was an old man sitting next to me. Probably couldn't read what the letter said, but he saw me beam a smile, and he put his hand on my shoulder and he said, always go the extra mile, son, because there's less traffic there. And that stayed with me my entire life.
Oh, I love it.
And he never knew his name, never saw him again, obviously, but that stayed with me. So what would be the one thing that stayed with you all your life that inspires you, or that you remember for its profoundness?
Oh, it's great. Other than carry umbrella so it doesn't rain, is experience is what you get after you've needed it. And it doesn't really help anything. It's like, as long as you go in blind, you'll come out better at the end. You've learned everything. It's like, I'd known that at the beginning, it'd be great. But anyway, I just think I saw it when I was backpacking when I was 16. I was like, yeah, that's true. But thank you, Michael, so much. It's been an absolute pleasure talking to you. I've learned a lot about a lot.
Well, I'm absolutely delighted to share some moments. But keep doing your amazing job, because you are inspiring a lot of people. And I'm so pleased that you think it's valuable to you as well, because what you're doing for others is very valuable.
If you'd like to contact Michael, you can find all of his details in the show notes, along with a recap of the advice that he has so kindly shared. Thank you for listening to How to Start Up. I hope these conversations offer you some confidence, encouragement, and reassurance that you're on the right track. If you enjoy this podcast, I'd be so appreciative if you were to rate, review, and subscribe, as it will really help other people starting a company discover it. Of course, if you've got any questions at all on PR communications or podcasting, please don't hesitate to get in touch with me, because at Fallowfield & Mason, we love supporting startups.